thank you for that. I want to come to you, Donovan. I want to talk about, last night we celebrated the SEZ Awards, and there was one particular investment that was hailed as one of the bigger, more exciting developments that has taken place recently. And that is an investment made by your company. Now I want to talk a bit about that. What difference has it made for you being located in the RBIDZ, and how has that assisted you to getting to where you are right now? And I think just talk a bit also perhaps about that particular investment that you've made, and how the SEZ has essentially enabled that.
Thank you, MEC, and greetings to the Deputy President and Honorable Parkstow. I think maybe where I want to start is to start by saying that South Africa is. I want to start in terms of how we came into deciding to be in Richards Bay, or South Africa at large as well. South Africa remains with one of the most compelling industrial destinations on Africa. The reasons for that is that we are well endowed in mineral resources. We have a very deep industrial capacity and engineering expertise. I think most of that emanates from or comes from the days, the industrialization between the 1950s to the 1980s, where you saw the Sasols, the Genrefs, the Suprefs, where you saw the ISCO metals. That led to quite a deep industrial capability that South Africa has, even at an engineering expertise level. We also have, in South Africa, you have a very sophisticated capital markets. You have the financial markets also coupled with the high-performing stock exchange on the continent. And also, most importantly, is that you have access to the African and the global markets through being at the ports and world-class infrastructure. So when you put all of those things together, they start to give you an idea of the natural competitiveness that South Africa has. Now, I think coming back to the conversation is changing. We've just entered a new era, a new industrial era, an era which is driven by transformative forces. I think there are two transformative forces that we're seeing globally. That's your artificial intelligence and your electrification or just energy transition. Now, when you look at those two transformative forces, they demand or require a lot of infrastructure. They need a lot of critical minerals, they need advanced materials, they need manufacturing capability. So, and when we look at AI infrastructure, I know everybody thinks about digitalization, it's AI data, all of that. But before a data center becomes a data center, it starts from the mine, it goes into refineries, and then it goes into manufacturing capability. So there's a lot of minerals that go into the value chains that underpin AI infrastructure, that also underpin the energy transition. Now, as Nyanza, we saw a generational opportunity, which says that there's an opportunity because Africa for the last many decades, in fact for many decades, has been exporting raw minerals with very little value addition. Specifically when you look at Nyanza, what we targeted is heavy mineral sands. We know we have South Africa probably has the world's second largest reserves when it comes to titanium dioxide, which is found in the ilmenites mined by the likes of Richards Bay Minerals, mined by the likes of Tronox. In Mozambique, you would find that there's Kenme, and it goes on across the coast into the rest of the continent. But all of this is exported at low values of $300 a ton, and then we re-import back the final product at $3,000 a ton, which goes into the manufacturing of paints, plastics, industrial coatings, inks, almost in everything that we touch every day. But again, we've exported at $300 a ton. We re-imported $3,000 a ton. We've just not only lost value, but we also exported the quality jobs that would come with that. So when you come back to us, we said we are going to build that industrial capacity, that mineral beneficiation operation. We commenced with the construction of that 2 months ago in the Richards Bay. It's of significant scale. It's $870 million. We normally use, to give you the idea of the scale, we normally use the number of football pitches. It's equivalent to 97 football pitches, 97 football stadiums. That's the kind of scale when you look at the kind of beneficiation that we need to start to bring onto the continent. Coming back to the SEZs specifically, when you look at what we need is infrastructure concentration. We cannot be trying to put these industrial capacities starting from basics by putting together infrastructure. You also have regulatory support when you're in the SEZs. You have logistics, you've got access to ports and markets and supply chain ecosystems. So those are some of the things that from a Nyanza perspective has driven us to go into the special economic zones. And there's a lot more that I'll touch on as we get into the conversation.
Thank you for that. And I think that already directly responds to the call that the Deputy President made to say we should not just be a destination for extraction, but for value addition and beneficiation. And really, it's encouraging to hear that we are now retaining a lot more of that value. We're actually onshoring some of those jobs, and we are building that industrial base that enables us to participate at that level of the value chain. What do we need to do to make our SEZs top of the chart? I hear you that they're world-class, and we agree, but there's always room for improvement. And we are competing in a global economy. We are competing with other regions globally. How do we ensure that the South African SEZs and our SEZ model is on the top of the pile? And I want to get just 2, maximum 3 key points from each of you in 90 seconds each. Thank you. Donovan.
Thank you. So I think I've got 2 points. The first one, I think the SEZs have done very well, and using the words property developers loosely. I think it's with all the infrastructure that they've put in, the bulk infrastructure, they have a massive opportunity now to take one step further and move to becoming utility operators. If you look at our project as an example, if we were in China, it would have cost half the price for us to, or half the peak funding would have been what we were looking for. Because now we have to start from a baseline where we have to put in water plants, steam-in plants, and all of that. So what I would say the game changer is, number one, the SEZs need to move a step further and say, we now want to be utility operators so that we can come and focus on what we do. The second one is more around what we call maybe industrial clustering. So it's not about just inviting factories that are not coordinated into these zones. The most competitive zones are zones where they attract value chains into a zone. So there must be some coherent strategy around, I think the Deputy President spoke about each zone must be referenced to something and create that comparative advantage. So attract value chains, not factories. So those are the 2 points that I would leave with.
Thank you for that. Attract value chains, not factories. Very powerful. Andrew.